New Jersey's map is glowing again. The question is whether buyers, sellers, and commuters can keep pace with the heat. Start with the ground underfoot. In October 2025, the Garden State's median sales price rose to $530,000, up 5% year over year. Sales volume across New Jersey slipped just under 2% in that same stretch, a small pullback against a national environment where U.S. home sales climbed more than 4% versus a year earlier. Inventory statewide ticked higher by nearly 4%. That combination, prices up, sales modestly down, listings slightly higher, signals a market shifting from scarcity to selectivity. The county map tells a clearer story. Monmouth and Ocean County led New Jersey in pending sales in October 2027. They also topped the state for closed sales that month. Cape May and Ocean recorded the strongest year-over-year growth in closed deals, while Cape May and Salem posted the biggest increases in pending activity. Fresh stock is building in pockets. Sussex and Warren saw the largest annual jumps in inventory. At the price summit, Bergen and Essex held the highest median sales prices in the state, while Passaic and Warren logged the biggest percentage gains. On the negotiation scoreboard, Essex, Passaic, and Union continued to fetch the highest percentage of asking price. Look beyond the state line to the pressure source. Manhattan employers are retightening the office tether. The Northeast is reasserting itself as a top real estate region heading into 2026, with proximity to New York City driving renewed momentum in nearby markets. A fresh ranking of markets to watch placed Northern New Jersey 7th and Jersey City 2nd nationwide for 2026, with Manhattan 9th and Brooklyn 4th. The jump was sharpest for Jersey City, which leapt 17 spots compared with the prior year. The dollars are following. Investment in Jersey City reached $177.40 million in the first half of 2025, and 65% of that volume targeted apartments. That gravitational pull is measurable across the Hudson. In October 2025, New York City logged 2,191 homes entering contract, up 10.4% year over year. From September to October, new contracts jumped 22%, far stronger than the usual seasonal rise. Sellers responded with supply. Across the 5 boroughs, 3,539 homes were newly listed in October, an 8.2% increase from a year earlier. Prices didn't moonshot. The city's median asking price hovered at $1,050,000, nearly unchanged from a year prior. On the final handshake, homes sold for a median of 90 to 7.9% of the last asking price, a roughly 2.1% discount. When New York City balances, New Jersey breathes, and then it bids. The appeal is not abstract. For commuters, near-term commute math and neighborhood amenity sets matter. That's showing up in northern New Jersey's rise and in cross-border markets like southwestern Connecticut. Through November 2025, Stamford's home sales ran 6% ahead of the 2024 pace, with the midpoint price at $710,000 compared with $650,000 in the first 11 months of 2024. $190,095 listing on Dolan Drive drew more than 900 online views in less than 20 hours. Some buyers are still extracting discounts. One Stamford home on Timbermill Road closed $75,000 below a $985,000 list, while a Norwalk house on Grandview Avenue sold at a 20% discount from its original price. Others are bidding up $200,000 over asking for a Palmer Hill townhouse on Havemeyer Lane and $100,000 over for a new Canaan Colonial. That split, deep cuts, and sharp premiums mirrors the pattern seen in the city. Well-priced, well-located, and well-marketed homes move fast. The rest get negotiated. Back in New Jersey, the terrain is uneven, but the signals are steady. Monmouth and Ocean Counties lead in active listings, pairing supply with demand. Sussex and Warren are ramping inventory. Cape May and Salem are flashing acceleration in contracts. Bergen and Essex command the high end on median price, while Passaic and Warren are climbing fastest in relative terms. And in Essex, Passaic, and Union, sellers are closest to list, locking in a higher percentage of asking price than other New Jersey counties. Zoom out to the national lens for context. In August 2025, a federal home price index showed U.S. Housing up 2.9% year over year, with prices unchanged quarter over quarter. The 5 states with the highest annual appreciation included New Jersey, New York, and Connecticut, 3 anchors in the Northeast Corridor that's now regaining its draw as return-to-office spreads. Nationally, the median existing home price in October 2025 landed just over $415,200, up a bit more than 2% from a year earlier. Mortgage rates fell to their lowest level in the prior 12 months by October, reawakening buyers who had stayed on the sidelines in the first half of the year. Those rates matter across the river too. In New York City's October 2025 data, Manhattan logged 1,060 homes entering contract, an 11.5% year-over-year increase. Queens surged with 396 contracts, up 17.5%. Brooklyn saw 580 homes under contract, a 2.4% dip, but still a robust count. Newly listed homes citywide hit 3,539, up 8.2%. Nearly half of those were in Manhattan. Brooklyn alone added 1,006 listings, a 17.5% jump. Inventory for sale across New York City stood at 17,243 homes in October, up 12.8% from a year earlier, with 8,966 in Manhattan, 4,239 in Brooklyn, and 3,009 in Queens. The city's median days on market held at 62.8, with Manhattan at 75, Brooklyn at 56, and Queens at 71. The rental backdrop is its own engine. In October 2025, New York City's median asking rent sat at $3,950, up 8.2% year over year. Manhattan's median rent held at $4,600 as inventory there contracted 11.5% year over year. Brooklyn's median asking rent rose 7.2% to $3,752, with rental inventory down 4%. Queens climbed 6.7% to $3,200, inventory down 5.1%. Across the city, the number of homes for rent was 32,409, a 6.8% decline from the prior year. Concessions, those sweeteners like a free month, expanded. In October, 23.5% of rentals offered at least one concession, up from 18.5% a year earlier. The Bronx stood out. 43.2% of listings offered concessions, and it was the only borough with a year-over-year inventory increase, up 24.4%, largely tied to new construction. In Manhattan, 20.6% of rentals provided incentives. In Brooklyn, 25.6% did. As rents stay high and options slim, the spillover into nearby New Jersey apartments and for-sale homes is real, even if not evenly distributed. Visibility and speed are the quiet levers. In New York City during October 2025, the top 5th of most viewed listings sold for a median of 100% of the asking price. The least viewed 5 sold for a median of 90 to 6.7%. In the financial district, sellers moved with urgency. Average days to go under contract fell to 82.7 from 168 a year earlier. Sale-to-list ratios show where patience pays. 90 to 6.1% in the financial district, 90 to 6.9% in Chelsea, and 92.64% in Bedford-Stuyvesant, where the median sale price was $995,000. Momentum on the island has a way of crossing the Hudson. When nearby neighborhoods tighten and sellers calibrate, northern New Jersey becomes the counterweight. More space per dollar, commuter lines within reach, and a suburban amenity set that narrows the trade-off. The winners are already taking their bows. Among the 100 hottest real estate markets identified nationally, 17 towns sit in New Jersey. In-state, Monmouth and Ocean County continue to act like twin engines, posting the highest pending and closed sales in October 2025, while also carrying the largest number of active listings. Cape May and Ocean are pacing the state in growth, while Sussex and Warren open the pipeline of fresh inventory. Pair that with Bergen and Essex at the top of the median price ladder, and you have a barbell, heat at the high end and churn where more homes are finally coming to market. Across the Hudson, luxury doesn't dull demand, it reshapes it. In October 2025, the priciest third of New York City's market drove a 31.5% increase in sales activity within Manhattan. New contracts across the entire city jumped 29.4% from September to October. Yet citywide asking prices were flat year over year, with a median of $1,500, and final sale prices typically landed within 2.1% of the ask. That's not frenzy. That's discipline. New Jersey benefits when discipline replaces desperation. The buyers and sellers who couldn't agree in 24 are meeting in 25, and the backdrop of slightly lower rates is the introducer. The jobs lever is turning too. Markets within a short radius of business districts are rising in the ranks for 2016. Jersey City's climb, 17 places into the number 2 slot, highlights demand for a home base that is one train stop from Manhattan and close to restaurants, retail, and waterfront parks. Northern New Jersey's 7th place position underscores the breadth of appeal across commuter towns and mid-rise hubs. Brooklyn's 4th and Manhattan's 9th positions anchor the resurgence. Phoenix held 10th, Miami stood at 3rd, Nashville came in 6th, Houston 5th, Tampa, St. Petersburg 8th, Dallas-Fort Worth retained the top spot. The pivot isn't that the Sun Belt vanished, it's that the Northeast now shares center stage again, with transit-linked neighborhoods and diversified job bases drawing capital and people back. This shift comes with friction. Some markets that boomed on remote work are cooling. Predictions for 2026 call out a set of places: Nashville, San Antonio, Austin, Fort Lauderdale, West Palm Beach, and Miami, where demand could wane. The drivers aren't hard to parse: natural disasters elevating insurance costs in parts of Florida and Texas, and remote workers choosing to move back nearer their offices. Those forces compress geography again. They don't guarantee a flood to New Jersey, but they expand New Jersey's potential catchment, just as local inventory in Sussex, Warren, Monmouth, and Ocean inches upward. Mortgage rate expectations are the other gear in this machine. Projections place the average 30-year rate at about 6.3% in 2026, down from a 2025 average around 6.6, with occasional dips below 6%. That wouldn't be a return to ultra-low financing. It would be a slightly easier runway, enough to thaw more sellers who locked in older loans, and enough to expand buyer budgets at the margin. In lockstep, nationwide sales of existing homes are projected to rise about 3% in 2026, compared with 2275. On the rental side, demand is expected to outpace supply as apartment construction slowed between 2021 and 2022, with rents likely to increase around 2 to 3% by the end of 2026 in many metros. Those broad contours run through the Garden State. New Jersey's October 2025 inventory was up nearly 4%. Sussex and Warren led the year-over-year listing growth. Monmouth and Ocean carried the most active listings while also leading in closed and pending sales. Statewide, the median sales price reached $530,000, up 5%, outpacing the national median of roughly $415,000. $200, which itself rose a little over 2%. Essex, Passaic, and Union captured some of the tightest sale-to-list dynamics, with buyers paying closer to ask than in most other counties. Bergen and Essex set the high-water marks for price, while Passaic and Warren logged the biggest percentage gains. Cape May and Salem registered the sharpest acceleration in pending contracts. These aren't isolated blips. They form a lattice where return to office policies, a modest step down in rates, and a regional rent squeeze all tug the same direction: return to the lived experience. In southwestern Connecticut, a sibling market to northern New Jersey, one $995,000 home in North Stamford drew more than 900 views in under 20 hours. That level of attention is a symptom of scarcity where commutability is strong. Buyers in the same area saw both extremes: a split-level colonial on Timbermill Road that closed $75,000 below a $985,000 list, and a townhouse in the Palmer Hill community that cleared $200,000 over asking. A New Canaan colonial crossed the line $100,000 above its list. In Norwalk, a Grandview Avenue home sold at a 20% discount from the original price. In other words, the market is not one thing. It is a negotiation where price, condition, and location decide the spread. The same patterns are visible in New Jersey towns anchoring transit, school districts, and downtown resurgence. That mix is why New Jersey's pocket-by-pocket map matters. Monmouth's shoreline and downtowns are absorbing demand. Ocean's master-planned communities and waterfronts are doing the same. Sussex and Warren are finally expanding choice after a lean stretch, which helps match buyers to homes without runaway bidding. Bergen and Essex continue to command top-tier medians, status earned by proximity to jobs and established neighborhoods. Passaic and Warren's faster percentage gains suggest buyers are shopping further afield as prices climb. Essex, Passaic, and Union closing in at higher percentages of asking price underscores that seller pricing is now closer to the market sweet spot. And across the state, 17 towns appearing among the 100 hottest nationally confirm that the Garden State's appeal is both broad and specific. On the rental cross-current, New York City's October 2025 data adds context for the months ahead. Citywide, the rental inventory fell 6.8% year-over-year to 32,409. Manhattan's was down 11.5%, Brooklyn's down 4%, Queens down 5.1%. Median asking rents were $4,600 in Manhattan, $3,752 in Brooklyn, and $3,200 in Queens. Concessions rose to 23.5% of listings across the city, with the Bronx at a striking 43.2%, Manhattan at 20.6%, and Brooklyn at 20.6%. The Bronx's rental inventory rose 22%, 4.4%, buoyed by new construction. For would-be buyers priced out of New York or renters seeking predictability, northern New Jersey, call it from Jersey City and Hoboken, out through Montclair and westward, sits within the same commute envelope. Signals suggest that sustained high rents in the city, paired with slow apartment completions nationally, will keep demand for New Jersey rentals and for-sale homes steady into 2026. Downstream effects ripple through capital flows. With investment in Jersey City totaling $177.40 million in the first half of 2025, and nearly two-thirds of that devoted to apartments, developers are betting on sustained in-migration from the city and the suburbs. If that pipeline opens faster than demand, concessions could become more common in specific neighborhoods. If it lags, rents hold firm or climb, pushing some renters to the for-sale market, provided rates ease enough to bridge monthly payment differences. Neither scenario breaks the state's momentum. Both favor markets with transit access, diversified employers, and a mix of housing types, traits that underpin northern New Jersey's 7th place ranking among watchlist markets for 2026. Of course, the Northeast's rise doesn't erase crosswinds elsewhere. Projections identify a set of markets likely to cool in 2026, including Nashville, San Antonio, Austin, Fort Lauderdale, West Palm Beach, and Miami. In those places, natural disasters and the resulting increase in homeowners' insurance costs are weighing on demand, while some remote workers relocate to be closer to offices. That matters for New Jersey not because those buyers immediately land here, but because the broader recentering on job hubs and reliable transit advantages, the Northeast Corridor, New York City, northern New Jersey, Long Island, the Hudson Valley, and Fairfield County, where commutability defines value. The city next door is also stabilizing in ways that support a measured New Jersey climb. In October 2025, 3,539 New York City homes came to market, up 8.2% year-over-year, with Manhattan carrying nearly half and Brooklyn adding 1,006, a 17.5% increase. Citywide homes for sale reached 17,243, up 12.8%. Contracts increased, but asking prices stayed flat at a $1,050,000 median, and sale prices landed at 97.9% of ask. That is the definition of a market where both sides are realistic. In that environment, New Jersey benefits from spillover that seeks value without sacrificing commute, and from sellers who can price to the moment, not to memory. The U.S. says price baseline supports that read. August 2022's 2025 data showed national prices up 2.9% year-over-year and flat quarter-over-quarter. New York, Connecticut, and New Jersey ranked among the 5 states with the highest annual appreciation. At the same time, national median existing home prices in October were just over $415,200, up a little more than 2%. New Jersey's $530,000 median sat above that national figure and rose faster at 5%. The distance between those two medians explains why some first-time buyers are still renting, and why the projected 22.6 rate path, down to about 6.3% on average, matters so much here. So, what's next for New Jersey? Base case, 2026 looks like a year of steady normalization with an edge. Northern New Jersey is poised to remain among the nation's most watched markets, with Jersey City continuing to attract capital and residents, and a commuter-led resurgence lifting nearby towns. With mortgage rates projected to average around 6.3% next year, down from about 6.6% in 2025, affordability should improve at the margins. That opens the door for more move-up sellers to list, adding to the nearly 4% inventory growth New Jersey posted in October 2025, and giving buyers more choice in counties like Sussex and Warren, where listings are already expanding. Statewide prices are likely to keep climbing, albeit at a measured pace, building on the 5% year-over-year increase to $530,000 recorded in October. Nationally, existing home sales are projected to rise roughly 3% in 26. In New Jersey, that should translate into modest gains in transactions where sellers calibrate and buyers accept the new normal on rates. On the rental side, demand is expected to outweigh supply as fewer apartments come online, suggesting rents in many metros will end the year up about 2 to 3%. New York City's elevated rents in October 2025 concession share of 23.5% suggests certain submarkets may use incentives rather than price cuts to maintain occupancy, easing churn but keeping overall rent levels firm. For New Jersey, that points to stable or strengthening demand for both rentals and entry-level for-sale homes near transit. 2 watch items could bend that path in the first half of 26. First, the return-to-office drumbeat in New York City. If more employers formalize in-office policies, northern New Jersey's commuter towns, from the Hudson Riverfront to rail-linked suburbs, stand to gain. If those policies stall or reverse, the heat could diffuse, softening urgency among buyers who were moving to restore a commuting tether. Second, the mortgage rate glide path. Projections anticipate an average near 6.3%, with occasional dips below 6%. If inflation headwinds keep rates closer to 2020's 6.6% average, sellers who locked in older sub-4% loans may hesitate to list, tightening supply and amplifying price pressure in Monmouth, Ocean, Essex, and Bergen. If rates undershoot expectations, the spring market could surpass the seasonal lift posted in October 2027 when New York City's new contracts jumped $20.04% month over month, and northern New Jersey was already moving up the national rankings. There's a third undercurrent worth tracking as the year unfolds. In New York City, rental concessions rose to 23.5% in October 2025, with 43.2% in the Bronx, 25.6% in Brooklyn, and 20.6% in Manhattan. With the Bronx's rental inventory up 24.4% year-over-year thanks to new construction, incentives will likely remain part of the toolkit. If that incentive share expands meaningfully in 2026, some would-be New Jersey renters could be tempted to test the city again. If apartment construction remains slowed nationally, competition for leases in New Jersey's most transit-rich corridors could intensify, nudging some renters into the for-sale market, especially if rates behave and listings continue to rise. For now, the message is simple. The Garden State is back on offense. Prices are up 5% statewide to a $530,000 median as of October 2025. Inventory is building in key counties by nearly 4%. Monmouth and Ocean are leading both pending and closed sales. Bergen and Essex are setting the ceiling, while Passaic and Warren rise fastest in percentage terms. Cape May and Salem are accelerating. 17 New Jersey towns sit among the nation's 100 hottest markets. Across the river, New York City's sales pulse quickened to 2,191 contracts in October, up 10.4% year over year, while 3,539 new listings and a flat $1,050,000 median ask created balance. Rents remain high, $4,600 in Manhattan, $3,752 in Brooklyn, and $3,200 in Queens, with concessions at 23.5% citywide and the Bronx inventory up 24.4%. Investment is flowing into Jersey City, $177.40 million in the first half of 2025, 65% aimed at apartments. And nationally, the price baseline rose 2.9% year over year in August, with New Jersey among the 5 highest appreciating states. It adds up to a market that's not waiting around. If you're buying, focus on commutability and condition. In Essex, Passaic, and Union, be prepared to pay close to ask. If you're selling, study the comps and the pace. In Monmouth and Ocean, strong demand meets abundant listings, and the homes that show best will separate. If you're renting, weigh concessions across the river against rising demand at home, and watch where new inventory is actually being delivered. The old trade-offs are back. The numbers favor those who move with them, not against them. Make your move with your eyes open and your calendar set to the first half of 2026. If this helped you see the map more clearly, share it with someone who needs a compass.